Hi there, Sam Lee, CEO of NorthIsle Copper and Gold. We've got a very large and significant copper and gold porphyry in British Columbia, where we continue to build more ounces and more pounds through a very aggressive exploration drilling. We have strong consent from our First Nation partners. We have excellent support from our province and our federal legislators who are focused on the critical metals motif, and given the fact that we're in a location with already built infrastructure, power, access to clean power, and roads and ports within a 25-kilometer radius, this makes us one of the top and most compelling opportunities in the market today.
Sam, good to see you. It's been a while since we saw you, and we're going to kind of rip through what you've been up to since we last spoke. Look, been a tough market across the board for all companies, all equities. Gold, copper, obviously showing signs of resurgence recently. And you've named a few things which I think we're going to talk about a lot today. But for me, one of the things that has happened, and I'd love you to explain the why and the how, was this slight tweak in your plan last year. So can you tell us about what was it and why?
Sure thing. So, look, I mean, obviously, based on my background, we are extremely focused on market movements and trends and where we are in the cycle. And obviously, COVID was a little bit of a disruptor and force for us. But pre-COVID, what we did determine was a very large, attractive economic porphyry, copper-dominant gold, massive byproduct, about $1.1 billion NPV, about 19% after-tax net asset value. 19% higher, or rather, net asset value, $1.1 billion, capex of approximately the same. So this was a medium copper project with a massive gold credit and a relatively large capital intensity. So this is the second half of the cycle project, which we thought we were going to be coming out of COVID very, very quickly with. Obviously, the disruptive force of COVID, supply disruption, inflation, recession, really stalled that. And so when we recognized this, we turned to our quite vast 50-kilometer porphyry district, of which we have a 35-kilometer contiguous ownership of. And we focused on the opportunities that were close by, within 3 kilometers of our defined project, that we could potentially develop as a low capital intensity, higher margin project. And through that thinking, we decided on focusing on an area called Northwest Expo, which is right beside Red Dog, which has already defined 53 million tons of resources. And Northwest Expo really intrigued us because through our drilling program, we hit intercepts of well over 1 gram per ton over nice thick, juicy 100+ meter intervals. So that was our decision. That was our decision last year to try to define this lower capital intensity, higher return project. So obviously, it's good in theory, but execution is critical, and obviously funding these types of programs through a terrible market is also critical. We've been very successful in doing both. We have been systematically over the last 6 months providing the market with evidence around our plan. So we started with, obviously, I think this is what really awoken the market back in September or October. We hit drill intercepts of about 2.1 grams per ton gold equivalent in this area of Northwest Expo across 135 meters. Within that intercept, we actually hit over 5 grams per ton of gold equivalent within a breccia zone, within the hydrothermal breccia zone that has come up from underneath, and obviously we intercepted it at pretty much at surface, 65 meters. So that really captured the imagination of not only the market, but of our exploration team. We were all out in the field right now. I come to you from our operating office in Port Hardy.
I was about to say, you should tidy up your room if that's not...
You know what they say about brilliant people? They have messy minds and messy desks. Yeah. They have messy minds and messy desks. But anyway, so that really captured the imagination of our group around where this source, this potassic layer, this pride that everyone's looking for, from the major gold companies to the major base gold, where is this located relative to where we're drilling? So Suffice it to say, we have not only established this really exciting starter zone in Northwest Expo with metallurgical results coming out around 90% recoveries for gold, 80% for copper. We just released our resource a couple of weeks ago that establishes a 1 million ounce resource in indicated, another 0.7 million ounces in inferred. This is very high value per ton rock. So to put things in perspective, it's about 3 times the value per ton in terms of NSR value per ton than what we had at Hushamu, our original project, right? And so you can conceptualize now, if you have 3 times the value per ton rock, you can potentially make a starter pit, a lower capital intensity, a higher margin pit. And that's exactly what we're doing. So how is that relevant to the bigger project? Well, we're still one of the most critical, focused on one of those critical metals on the planet, which is copper. But copper is a longer-term proposition. Yes, we've seen some really short-term, near-term, medium-term macroeconomic events that have created a stimulus in copper. But I don't think there's anybody in the world right now that doesn't believe in the longer term proposition of copper. And so if you could see what we're trying to do here, which is creating that higher margin, lower capital intensity starter operation using gold, which we view is a critical currency, not a critical metal, but a critical currency, because it has a store of value, because it has the ability to allow us to access a much lower cost of financing, because it does have this stimulus, this catalytic characteristic for investors to really hold on to. We're using that attribute, that strength, upfront to create that, call it, 10 to 12 year project that then bridges into the much longer 22-year project. So if you think about it, and as a whole, we started with a 22-year project with the PEA definition. We've now are looking to expand it to 35, 40 years with a starter pit that has a higher margin, lower capital intensity effect in Northwest Expo. So that's, we're 2/3 of the way there. I think we've, as I said, systematically shown the market quite a lot of evidence over the last 6 months that we are on the right track. And of course, wrapping it around the economic report is what we're now fully financed to do in the next 6 months. But the subset to that, and as equally, if not more important, is that the exploration that I'm talking about around this, where is this coming from? Where is the source of the fluid coming from? Why are we seeing 5 grams per ton gold equivalent at 65 meters from surface? Why we had another exploration new discovery in December called West Goodspeed. It was about 0.5% copper equivalent over 135 meters in 2 holes, just made in virgin area within just 7 kilometers east of Northwest Expo. That's mining grades, global mining, average global mining grades there. So why are we seeing all of this happening at surface? Well, the answer is that it's obviously coming from fluid source underneath. And so, clearly there's approximately 50% of our budget that's going to be focused on trying to discover and hit that potassic layer, that prize, that stem of the mushroom of the porphyry, which we're going to be starting drilling in the next month. So a lot of really strong and compelling reasons as to why we have outperformed our peers, why we've outperformed the market, why we've outperformed even the commodity prices over the last 6 months. It's because we've set out a very strong strategy that's based on macroeconomic movements, and we've now systematically shown that we can execute that strategy and raise the capital in order to do so.
Well, someone's a bit excited about their project. Okay, to simplify that, you're porphyry hunting. You are focusing on high grade, and you're focusing on trying to get a starter pit going, so because there's anti-dilutory potentially to developing the entire region, right? Because you've got a lot of different targets and you've got a lot of ounces and pounds in the ground, right? Is my interpretation of what you just said. Can you talk to me though about the way you look at the macro factors, like, okay, copper's on the rise, been over $4 for a while now. Gold's up, hitting nearly 2,200. It's been 3 weeks, so we'll calm down a bit. But if that sustains or grows this year, as expectation is, have you looked at the way that the equities have performed, not the market in the context of commodity prices, but the way that equities have performed and the way that equities have not reacted to high commodity prices as part of that decision to change the strategy and make it a sort of softer entry point? And if so, are you going to focus on the development and forego some of the exploration upside that I think some people chase?
Yeah, that's a really, really good question, right? Because this encapsulates capital allocation decisions. This encapsulates how you market it. This encapsulates a whole bunch of things, and obviously strategic decision making. So this is my view of the markets, the macro market today. It's taken 2 years for us to recognize and realize the strategic importance of gold, right? We've been in this very volatile market where we have hyperinflation, we have world instability, we have poor performance of fiat currencies, yet we haven't seen the breakout in gold. Yes, we've seen a little bit of a progression towards all-time highs, but we haven't seen the breakout that we've seen and that's been sustained over the last 2-3 weeks. And so what does that tell me? Well, it tells you there is conviction today for that thesis to come into reality, to be converted into reality. And the longer it stays at these levels, the more conviction that there is. And so what's happened since post-COVID is that the conviction has been on anything. The risk-on attitude has been decimated. If people remembered, 2-3 months coming out of COVID, everyone was calling for the roaring 20s, right? Everyone thought this was going to be a massive jump into just risk on, high tolerance for high alpha stories. And it didn't transpire, and it just got worse and worse and worse and worse with this accumulation of depressive activities. And I think that we're now in a state of shock. We're all still under rocks. We all still don't want to be the first one coming out. We all understand copper is the great proposition for critical metals, but it's so long dated, at least in terms of a lot of the analysis that we see. People just think they have time. That's a risk-off attitude, right? And that relates to what you're talking about in terms of equity. Why is there such disconnect between the commodity gold at all-time highs and you've got gold companies, producing gold companies that have historically traded at 2-3 times their NAVs in this environment? Why are they almost at their record lows? And it's because that conviction. There's a lot of skepticism around not only the profitability and the sustainability of gold projects, but it's also just the risk-off attitude generally from a macro perspective. I'm going to tie that into another comment that I'm going to make, but I'll first make that comment around copper. So what we're seeing in terms of copper, again, everyone believes in the long-term proposition. Everyone's seen the numbers. I don't have to recapitulate that. But what's happened recently over the last 4 months is that the near-term trade has come into play because of the lack of supply. So we've seen the supply disruption having a tremendous effect on the smelters, such that the TCRCs have actually gone very close to $0 TCRCs. And so what that causes is obviously the condition where there's contraction in capacity, smelting capacity. And if there's contraction in smelting capacity, then there's going to be actually a diminishing effect, diminishing inventory and product inventory. And so whilst we were in an environment where we were going to see a surplus this year and see a contracting surplus into a deficit in the following years, that may have been accelerated now because of the condition that we were seeing, which is starting from the supply side, starting from the closures of these big mines. So that's good news. That's good news because then it sort of acts as a catalyst to the longer term proposition. But how long term is that? I don't know. That's not the bet that we're trying to make here. We just understand that there's that long-term proposition. But then to tie both of those two conditions together, and if you just look at what the large gold companies are doing, they're moving into copper. And it's because they themselves understand this really almost perfect balance of gold, and it's almost like hedging against different conditions of gold leading copper, of having that sort of incredibly strong currency, critical currency, facilitating the much longer term critical metal, right? And I think that without fail, almost every single major gold company is focusing on that transition. And not to say they're getting out of gold. Gold, again, is an incredible store of value. It provides all these virtues that I talk about, but to then have greater longevity, greater access to capital. There was a situation the other day where I heard a board was considering, diversifying into base metals, including copper, from gold. And one of the give and take was, why would we alienate our gold investors who are giving us this premium? Well, A, they're not giving you the premium anymore at this point in time, and B, you may be looking at the wrong subgroup of investors. You're not looking at the trillions of dollars of generalist investors that, as you know, Matt, we've been, as an industry, trying to access for decades now. How are we going to access this $1 trillion pool of capital, this generalist pool of capital? Well, I truly believe it's to be relevant in terms of what the world is progressing towards. And of course, the world is progressing towards decarbonization, electrification, and you can't electrify and decarbonize without copper. So that's kind of how we kind of look at the general macro landscape, and we think we're absolutely uniquely positioned to take advantage of both.
Right. So now drop down and tell me what you're going to do in terms of your growth component. You're feeding into those thematics, brilliant. But do you work towards getting the starter pit going and getting into revenue, as quickly as you can move through those phases? Or do you continue to focus on exploration, or can you, those two things can they marry together?
Yeah, so they have to marry together for us, right? We don't want to be only relevant in one part of the cycle, second half of the cycle. Okay, we want to be relevant across the cycle, and so we have this ability, this unique ability, to be relevant across the entire cycle through this high margin, low capital intensity project that we're looking to develop through Northwest Expo and Red Dog. So half of our budget, so we raised $6.5 million. We got $2 million additional in exercise warrants. Half of our budget is going to be put towards the development of this low capital, high margin project. And then half of it is going to be allocated towards exploration. So, we're cognizant that, or I should say, we're blessed that we have this ability to pull multiple levers that make you relevant. Like, there's no doubt about it, but the market was very excited when we saw these grades over these intervals back in September or October. That was really the start of the attention that we got. And yes, development of this project makes a lot of sense from an economic perspective to us, at least as we run our numbers. And that's something that needs to be progressed because, quite frankly, that is the essence, or that's the thesis of our investment thesis for our company. You have this underpinning value of nearly 5 million ounces of indicated gold resources and about 3 billion pounds of copper in indicated resources. And now we're going to convert probably another million ounces, another half a billion pounds in the next couple of months. But that's the compelling baseline for the investment thesis. The exploration is exploration. It's never a guarantee, and it's usually handicapped as a pretty low probability. But you still have this underlying fundamental value proposition that should act as the floor for any type of weakness, and regardless of whatever environment you have. So that's how we kind of view it. The more opportunity you have to be relevant in any part of the cycle, the better. And that's how we're progressing our our capital programs.
Okay, so kind of 50-50 allocation between the kind of growth component of exploration, making discoveries, always good for headlines and good for adding ounces. The bit I kind of want to try and understand, because when someone says anti-dilutory to me, I get a little bit excited because it says it's kind of I'm on a free ride effectively, because you've raised 6.4 million back in December, or certainly announced closing in December. I assume you got the money closed before the end of the year. You also got the warrants through about 1.4 million bucks from Michael and Pierre more recently. So money is good from that perspective, and I guess it gives you options in terms of the how you move forward and the pace at which you move forward. All good. The anti-dilutory bit, this open pit, you dropped a bunch of pounds and ounces into the conversation there. You talked about 22 years, maybe increasing to 35 years life of mine, that type of quantum. So it has the potential on the scale there, but with regards to the growth, so the short-term open pit, you've got to, how are you coming out there in terms of, again, the type of drilling, the ounces that you're going to need to create because you can start at any size. You know, starter pits they can be small and beautiful, or they can be just a little bit bigger. What are you thinking about that?
Yep, good question. So we've hired Ausenco to do trade-off studies across 3 scenarios. But, you know, I think we clearly have our own impression of what the most impactful project would be. And I think that if we can get this project to north of 100 million tons at, you know, grades of north of, call it 0.7 grams per ton, and a strip ratio that's, you know, sub 3, that is a pretty good project. That's going to be a compelling project. From an IRR perspective, you know, we already have $1 billion NPV project, 19% after-tax IRR project. So our objective is looking to improve on that, right? So we're not going to do this if it's going to be the same or worse. It's you know, we have some visibility as to that this is going to be significantly more attractive. So certainly from a capital intensity perspective. So that's the parameters I think that we would assume our base case would be. And right now, based on what we've just released, we have 54 million tons at Red Dog. We've got about 50 million tons at Northwest Expo, so that's your 100 million tons. The average grade of that, if you just combine them together, it's about 0.7. The NSR value, approximately, again, if you just put them together, is about approximately 50, 60 bucks a ton. And then the costs are going to be reasonably consistent to our PEA, plus inflation, obviously, and plus additional stripping. So what we kind of see here is margin expansion from effectively $12 per ton, which is what our PEA suggested. It was $22 off of $10 cost, to something significantly larger, significant expansion beyond that. So that's margin expansion allows you to consider lower, smaller capital intensity projects, right? That's what higher grade ore allows you to do, and that's what we think we have here. And in the parameters of Northwest Expo and Red Dog, that's over 100 million tons of it.
Right. Okay. And that would be big enough, because obviously, startup there is that trade-off study about, it may be slightly less efficient now, but it gets you going, it gets cash flowing, all of that good stuff. You've also got to work out where the pit is, what's the scalability of the kind of capital components, but in terms of all the things that you're going to have to put in place. How do you feed into that trade-off study? Do you just leave it to them and say, look, what's the best return on capital invested, bearing in mind the market, bearing in mind what's happening with the commodity prices, and bearing in mind where we sit as a company and our access to capital and the cost of that capital today? So how do you feed into that?
Yep.
Or do you?
No, absolutely. It's a very, very good question. I think it's beyond that too, is how do you permit it as quickly as possible as well? So the three kind of, at this point, like obviously we can grow through exploration at Westgood speed as well, but the three main assets that Ausenco and ourselves are considering is Northwest Expo, Red Dog, and Hushamu. Okay, Northwest Expo and Red Dog are pretty much beside each other. Hushamu is about 9 kilometers away, right? And so from a footprint perspective, from a permitting perspective, from a watershed perspective, it does make a lot of sense for the first two, Northwest Expo and Red Dog, to be to be considered together, right, as your starter, right? And Hushamu is the higher tonnage, lower grade project that has tremendous value, but obviously, as we said today, earlier on, it's second half of the cycle value when porphyries rip, right? So I think that the sequencing, the logical sequencing is start with Red Dog, Northwest Expo first, and then after the, whatever it is, 10, 15 years, after you've made cash to fund and permit the larger project at Hushamu, which is at this point about 600 million tons of copper and gold. That's when you have the time, the fundability, the breadth, the depth to actually go after that project. So to your question is that how do you then contemplate a project today? Well, the big question is throughput, right? What's your throughput going to be? In the PEA, we've contemplated, I'd say, a medium-sized throughput, 75,000 tons per day. That's the big project with Hushamu that we released in 2021. We're looking at a smaller processing plant of approximately 15 to 20,000 tons per day for that Hushamu and Red Dog, for that Northwest Expo and Red Dog package, right? So that's the starter pit size. That's where we're, if you look at Artemis's Blackwater, for instance, 15 to 20,000 tons per day is about 700 million Canadian, right? So that cuts our CapEx by almost 2/3.
Does Goodspeed have the ability to kind of feed into that as well? Because
Absolutely.
you know something sort of just December, near surface numbers. I just thought that was kind of, are we going to get a Red Dog sandwich?
That's exactly right. And obviously, geologically speaking, we haven't considered what the relation is of these three. So this is absolutely a trend, right? It's a trend that goes from west to east, from Northwest, Red Dog, Goodspeed, right? And now we're seeing obviously significant mineralization at Northwest Expo, which is getting a bit technical here, but we believe is in the lithic cap, right? Which is the cap of a porphyry. So that is the top part that essentially caps the upward moving fluids. And in this case, it's actually highly mineralized, right? So that makes us really excited because obviously if it's highly mineralized in the cap, it should be really mineralized in that potassic layer. And then we move to Red Dog, which is a breccia. So it's actually a porphyry signature. It's not in the lithic cap anymore. And then you go to West Goodspeed, which is pretty much right in the porphyry. You've got the deveining, you've got the copper mineralization, and it's all kind of trending towards the east. So again, this is very early days. We've now charged our growing exploration group to try to find that connection between the three. But even if it is separable, to your point, Matt, it's 3 kilometers each, so it's separated from each. And so if we do have exploration success at West Goodspeed, which we've allocated approximately 25% of our exploration budget towards, then there is a chance of just adding it to the project envelope because it's part of the same watershed, it's part of the same trend. It's only approximately 3 kilometers away from Red Dogs. So we would have to understand where we would put our central processing mill, which would probably, but that's these are all good scenarios that would cause us to perhaps delay a final report on the economics of it. And we should get these results, these exploration results, not only on West Goodspeed, but also on the southern portion of Northwest Expo, which is where we believe the high grade has been displaced. We should get those results by mid-year this year, which then allows us to, and by that time we should understand what the scenario analysis that Expo has been performing. And so by that time we can either go full steam ahead on a PEA, 43101 PEA, or we go ahead and try to expand with exploration success, expand out the resources in any direction that we see prudent. And your question about dilution is such an important question. Clearly, I don't have the answers to any of these exploration results right now, so there's no way to make capital allocation decisions on these results. So in December, when we did our financing, we did it predominantly because a major U.S. gold investor, Franklin Templeton, which we announced in December, wanted to pick up a significant position in the company. And these is back-end, no warrants, very reasonable discount. We did a critical metals funding and a charity funding that gave us about a 65% premium to the back end. So really, really attractive pricing for us and certainly for our investors as well. Obviously, when we announced this fully funded deal, it became over 2 times oversubscribed. But we only took enough, $6.5 million, to fund the exploration program that I've just talked about right now, right? We don't know what the results are going to be, so it would be not prudent of us to dilute at that level. Well, since then, we've increased about 2 times since that offering. And so with exploration success, you can only imagine we would have even greater success, which really does limit dilution. And I think I've been on your show many times before preaching the word around dilution. When you have 4 shareholders, 5 including myself, that owns 45% of the company, dilution is a very important, the denominator is a very important number, because you could grow fast on the numerator from a growth perspective, but if you keep on over diluting yourself, that dollar per share value doesn't grow as quickly. And so that is something we've been entirely focused on now. And you know, I think to your point earlier, it's easier said than done. When you're in an environment where no one's going to give you money, you're just going to have to dilute, right? But we have been so successful and blessed with this core group of cornerstone shareholders that have supported us in rough times, and now we are obviously showing execution success, which is now encouraging the much larger institutional shareholders to be involved.
Well, like I say, it's always show me, don't tell me, and I guess you guys have done that. Look, I'm running out of my allotted time here with you. So one last one, if you don't mind, is you're going through a process of, with regards to studies, engineering studies. The geologists are cracking on with what they're doing here, but the other big thing that has changed, or seems to have changed, and I'd love you to explain why, is social license. I'm not going to use the word ESG. I'm going to use the word social license, because people 2.5 years ago, very nervous about your ability to be able to do any kind of mining where you are. What's changed?
Well, quite frankly, nothing's changed. The people are starting to understand that as an entrepreneur, which I think people understand that I am. Yes, I'm an engineer, but I'm also an entrepreneur. I would never be in a region, an area that didn't want a project to move ahead. And that was the first thing I asked when I did my diligence to come to this project. Is there will within the communities, First Nations, for a project to move forward? And if there's will, then I can work with that. I could work by getting the consent piece in place through, authentic and sincere activities, right? So it never changed in my mind. And so what we've been doing very, very significantly over the last 3 years with First Nations and the government is that we are getting a consent-based approach first. And what does that mean? Well, it means that we recognize the government of First Nations to give us consent prior to us going to the province, the Crown, to get their final permits. And the reason why we're doing that from a business perspective is that it's good business because we know we have strong will within the community. We just finished a community meeting yesterday with respect to one of our First Nation partners, and great questions, really engaged, super active in terms of, being excited and wanting to push this project forward as quickly as possible because of the economic opportunities. And so as a business person, you look at this and say, how can I then create this as a positive outcome, right? And we know that the government is charging industry to take this very approach. And so we ended up going down the road of something quite unique, which is signing these consent agreements with these First Nation groups that essentially stipulate we need consent before we go through the permitting process. And that caused a bit of time lag because we wanted to do it right. But what that resulted in was us getting our permits last year for this program that we just unveiled in 16 weeks from the province. So we from cradle to grave, the provincial permitting timeline took 16 weeks. It takes 18 to 24 months to get these same permits anywhere else in BC. And then certainly when you're looking at other areas like Peru and Chile, it takes over a year to get these permits. We got ours in 16 weeks. So automatically, immediately, the idea that you can't permit on the island is refuted. Okay, that's the evidence. We've press released it. We've gotten quotes from the minister supporting it. So then what has happened in British Columbia? Because this is probably going to be another big question within your viewership, and it's a concern in British Columbia. The province then looked at our model and said, wow, that's the model we want to take. We want the industry to get that consent, to get that collaboration. Obviously, through UNDRIPA, it's free and informed, a consent driven by consultation, right? But these guys, NorthIsle, have actually gone to the point of consent first. And they were rewarded by getting their permits processed very quickly. So why don't we apply that to the rest of the province? That's problematic. Because, again, you cannot treat every First Nations community the same. They all have different objectives. They all have different influences. They all have different experiences with natural resource extraction. So, for example, Halta and Nishka, these are the two largest and most successful First Nation groups in British Columbia that are essentially responsible for the Golden Triangle. And because of their ability to develop that knowledge base quickly, they have now become one of the most powerful First Nations in the province, right? That's one end of the spectrum. And then the other end of the spectrum is non-consent, right? You've just got First Nation groups that just will not consent. But 90% of the First Nations are kind of in the middle, which is kind of indifference or just not really knowing what extractive industries are, or not having the capacity or the population or the ability to even comprehend all the information that's getting flowed to them. So I personally believe that our approach works for us, and that's the advantage of NorthIsle Copper and Gold, is this partnership, this collaboration with our First Nation partners. But you can't use that model blindly across the entire province, because if you're in a situation where you do need to have a little bit of authority to move projects forward, well, if you don't have that process, you're going to lose like 90% of the projects, which again, by the way, is really good for NorthIsle, because that's why all the attention from the provincial and the federal government has been placed on us today, is because not only recognizing that we do have these consent pieces in place, we also have, from their perspective, the government's perspective, 90% of the infrastructure already built. When I say infrastructure, I don't mean the mill or the port, but I mean power. We have over 100 megawatts of power, excess power capacity, clean power capacity for this project, if we so choose to draw from it. We've got roads, paved roads to go right into the project. We've got a town, Port Hardy, that is very, very, very much wanting and open to host all of the direct and indirect workers that would be coming through this project. And so from a government's perspective, when they carve out $2 billion or whatever the number currently is for infrastructure build around critical metals, that gets you nothing, right? So they would naturally focus on areas that don't really need a massive upgrade in power and roads, the major components of infrastructure. So that's the other reason why we're actually being very much supported by the government, and have spent a number of weeks now marketing with the government around the critical metals motif.
Sam, appreciate the update. See you soon.
Thanks very much, Matt. Talk to you soon.